All right, so initially the market was higher on what the media was calling a so-called Goldilocks jobs report. Listen, the bottom line is there are some cracks in the armor. Wages were flat, significantly below inflation. They're not growing. Inflation has been. More people are coming into the labor force. I love it. I think it's great news. But the Fed, that's one of the checkpoints for them. Unemployment rate consequently popping really higher. You know, the Federal Reserve said everyone thinks they're going to be hell-bent on derailing this economy. Today's news probably is what they wanted to see, at least for a start. Joining me now to discuss, SureVest CEO Rob Luna, Kingsview Wealth Management CIO Scott Martin, and Baird PWM market strategist Michael Antonelli. I'm going to pick up on that with you, Scott. Payne, CME Fed Watch sees 56% chance of 75 basis points. Now, yesterday it was 75%. I've been hoping the Fed was going to be aggressive. I was looking for 100 basis points a few meetings back because, listen, we know they want to rebuild their credibility, but also I think the harder and faster they go now, the more wiggle room they have down the road, because we know these things have a delayed effect, and I'm really concerned about them hiking as we get into the throes of the economy really, you know, from slipping off of the proverbial snowball becoming a boulder, and they're still hiking rates, are still taking accommodation away.
Sure, it could be a long, cold winter, Charles, and that's on, I think, the back of a housing correction, or at least maybe even a crash to some degree. So I agree with you. I think they had the chance and still have it to put in a 100 basis point hike there, but they're not going to do it. And I think that's the problem the market is kind of telling them, is saying, look, we've given you the window, we've given you that lead block through the line of scrimmage, take it, and therefore you can be done with the hiking sooner than later, because let's say they do 50 in September here, maybe another 25 or 50 in November, then you've got to say that January is on the table. So the sooner they get this through and get done with this, I think sooner the market's going to start to rebound and get comfortable with the Fed.
You know, speaking of hoping for bad things, Wall Street has been rooting against independent retail investors in their favorite stocks for a long time now. Some of those stocks are really going down. Here's an interesting thing. Cathie Wood saw actually $800 million in outflows out of her ARK fund. Scott, you know, I'll go back to you on this. I never really understood the notion of rooting against other people, whether than the market or anything else, except for, you know, let's say, face it, Philadelphia Eagles fans. But some would rather see, I guess Wall Street just wants to see regular folks line up, you know, and just hand their money over, buy the typical Wall Street products. But it's just this whole thing is rubbing me the wrong way. Just your thoughts.
Yeah, me too. I mean, look, the world is big enough. There's enough money out there for everybody to succeed, or a lot of them to succeed. Investors need to have choice too, Charles. I mean, if you limit the amount of options that an investor has, that could limit out the outcomes they're going to have too, as far as their portfolios. And then secondarily too, if you think about Cathie Wood and some of the other newer, kind of more shiny strategies that are out there, those actually add liquidity to the markets too. So when you're kind of looking at things over maybe a 30,000-foot view, I think more the merrier. And also over time, the funds that provide the most return and the less risk for those investors, those are the funds that are going to get the money anyway. So you do it on a merit basis, right, and therefore those are the funds that get the flows.
Hey, Scott, what are you doing?
Just dollar cost averaging here, man. I mean, back into tech, to kind of Michael's point about kind of baking that trade when it doesn't look so good. Those are the trades you have to make. So TMO, Thermo Fisher Scientific, and NVIDIA. Terrible week for NVIDIA, but it looks oversold here. So just, again, stepping in slowly here, but trying to pick off some of these stocks at relatively lows because of the fact, too, that the outlook here, especially with the earnings growth those two companies have in the future, looks pretty good for a higher price.
All right. Well, pro tip on NVIDIA, wait for Paul Pelosi to make his move, because as soon as he does, I'm putting everything into it. Thank you very much. A lot of great stuff, a lot of great wisdom there.